Good morning, traders. This is the weekly analysis. OptionsTender. Welcome, everybody. I'm going to go through SPX on multiple time frames. We're going to check out all of those indicators that we look at daily, each and every day. Also, the weekly time frames. We're putting it all in one today because I didn't do it over the weekend. Hope everybody had a great and safe 4th of July. So thanks for joining us here again. And if you're new here, go down to that bottom right hand corner, hit that OptionsTender logo and subscribe. So we do have memberships available as well. I did one. This one is going to be intraday, and we do them daily intraday for YouTube supporters. It's just a way to support the channel for 99 cents a month. And then individual analysis, I already had videos done over the weekend or so. I tried to make some time priority for them for $4.99 a month. So not too much to ask for the type of information that's available, and I just wanted to make something a little bit more supportive of the channel available, since they don't really support until you get to those big time memberships. So let's jump into it, you guys. We're in the danger zone. Okay. You can call it the mega bill top, the big, bad, greatest bill around. You can call the top with that. It doesn't really matter what you label it. We're in that danger zone. And the reason is, if you're new, I've been tracking this 1929 trend line for quite some time. It goes into 2000, and also to, let me put in all of this information. Also to 2025, where we had our first little tantrum there, the tariff tantrum. Again, we always label when we get our reversals, and we're back at that 1929 historic trend line right here, right now, as of Thursday last week. We got to that point, and now let's see what happens off of it. So this is also in conjunction with or confluence with 2008. You had 2022 and 2025. So that split right there, and you got both of them. So this trend line is just a little bit above at that point. And so we still could tag that to the upper end. That would bring us to about 6,300 if price wanted to. But so far, we're getting a little reaction off to the downside. So let's see if the top is in, or if we have a couple more inches to go there. All right, and so for this week, again, there is a bullish situation. If we have time here, I'll go through that look there. So we'll keep an eye with those bullish interpretations. There's actually two, but I think they'll just kind of be one in the same, okay? Because we'll, as price gives us, a pullback, we'll give you certain areas where it should hold up and go to new highs if that's what it's going to do. But I don't think so. And the biggest reason is that GDP, the market value to GDP is just extreme, well over extreme. So I guess earnings are going to be really, really important this time around for when we get the pullback, probably into earnings, and then we'll see where things propel us at that point. All right. And it just so happens, I'm just thinking about this now with those cycles and everything that I just did for the individual members. We'll keep that in mind. I'll kind of keep that what we talked about today, those zones that we looked for into, let's say, earnings, into tech earnings or so, and let's see if that propels us back to the upside. So that would give us a reason to get a new high there. And we have our wave count and such that we'll be looking for. Okay, so our options expected move for the week is just about 100 points to the upside or downside. I was kind of anticipating that on Thursday. That's why I did the options plays that I did for the trade alerts. And that comes with the 99-cent version of the membership. So I talked about that, and the reason why I said I thought it was going to be about 100 points or so. And so that's non-biased to the upside or downside, but clearly we're looking to be into resistance here. So I think it's going to resolve to the downside. That's just my own bias there. It's just an opinion, okay? And for structure overall, we're still positive. We're in this positive posture. We're above the 8 EMA, the 20 moving average. It's the most important on the weekly time frame, and we'll look to see where that is at the time for traditional analysis, technical analysis. So we're just positive, but we're getting into these possible resistances, and they're just historic trend lines that are very much validated at this point. So we'll see what happens next. And so that would be my primary look here, is that we're in a wave 5 top, but there's a possibility that this intermediate wave 5 is only an A of 5. So we could get this B pullback and C higher as well. Okay, I'm pretty sure we'll have time to look at that on SPY. So let's make sure we do that. And let me close this window up, and now let's look at our indicators, and we'll zoom through these. We have our moving averages we talked about. We're definitely positive. We have our Demark that we're keeping track of. On the monthly, it's not going to move quickly, clearly. I think we're just at a 1 or a 2 count at this point. And we're starting to tack on to this count here. So we have 7 and 8. Nothing to trade off of at this point. So here's that options tender look. Okay, we have our negative divergence here on the monthly time frame. That's a huge deal there that developed with this new high. All right, remember, we're talking about this new high being distribution. And this is a good signal of that distribution happening. And we also have negative divergence on the RSI as well. And the slow stoch is positive at this point. We'll wait to see what price action looks. That's why we do this so often, what this looks like when this crosses over. And we had this crossover up here at the top at this candle right here before, and that led to the crash for the slow stoch. So let's see how this develops. Volume, not much else to look at here. Let's go to the weekly time frame. So the weekly, we had this 200% that came from the 2022 correction here. So that's from top to bottom. You have your extension out to the 200, and we're at that now. I know that we're spiking above it, but this is a really, really big resistance area that it's very important for price to hold above. At the most bearish, let me just move it over so we have more room to play with, so we can see. So you see we're at these historic tops here. So really price action shouldn't stay under here. So if we see a breakdown from that level, you want to see that regained, and that would be very positive for the market. And that would be a classic trading pattern. So price would go underneath, break above, and hold on to and continue higher. That's what you'd want to see there. Okay, looking at the moving averages. Again, this is a very positive chart. We had the correction right into the 8 moving average. That's our momentum indicator. And the weekly is our trend indicator on the weekly time frame. This is one of our most important moving averages. And so we're in a positive posture condition. We're just getting this 50 crossing over the 20. Let's see where that holds. We're in resistance. We're inside. We're forming inside weak. I know it's just Monday. We'll see where what the information gives us. Demark. So the Demark, we got our 9 count here, sell signal, and we had one more week up. Let's see where this heads at this point. We have a sell signal here. Oftentimes, price can get that 9 count and still move just a little bit higher. So this one right here is a good example. You have your 9 count on this candle, and then you have one more week up, and then you had your reversal. It's very possible that is the same exact situation that happens here. So they all rhyme. Here's another one where price went up just a little bit more. You had 1, 2, 3, 4 weeks of price action higher, and then you get slammed to the downside. So it can happen on point. Look at this reversal from the to the upside. You had the 8 count, then the 9 candle was above it. So not perfect, but it happened a little bit early on this one. And then boom. Let's go to MACD. So we're gonna want to see this histogram start to go lower from a darker green lower into the red area, which would mean that we're starting to get a cross here. That's not quite happening yet. We are overheated, and we want to see this slow stochastic curl over. So still in this positive real structure here. You can't say that we're getting a sell. The only thing that we have to offer is that we have the Demark showing exhaustion, and we're in those historic trend lines. So it's definitely contrarian. Still consider contrarian if you're shorting the market here, and that's what we're doing in the Discord. I've played these before. We called it out here. Did this last a very long time. For this distribution, you had 1, 2, 3, 4, 5 weeks just for this pattern right here. You had a sell-off, and then 5 weeks of nothing, and then a huge drop at that point. Do we dance around up here a little bit? It's possible, but we're getting started on our shorts. Just short. Again, let's move to the daily. I know we're zipping through this, right? We have to cover basically a weekly and a daily analysis. So here's a good look. If you have been following, I actually had these backwards. I thought that the purple one was down here and the turquoise was up there. I didn't have the same colors as the higher time frames. And so I didn't realize that last week until somebody pointed out in the Discord, Jeff, that we were at the 1929 highs, or was that flying disc? You guys are all fantastic. I appreciate you. So here's how important those trend lines are. And they came into confluence up here. And so it's still possible we can go tag this one. This would be our most bullish scenario if we can get above this trend line. But this is an objective short right from this point here. Okay, and these are exactly spot on to the other reversal spots in the past here. And I'm going to take this one off because it's not as valuable to us right now. Oh, I forgot to update. I didn't update the options expected, or this was last week's options expected move. I don't need this. It's not important on the daily time frame. I have those on the 130 and the 65 minute for us to look at. But we're in this historic trend line. We're getting a reversal. Let's see what happens. I do think we should at least close this gap. If we're going to go higher, I want to see this gap close here, and then form some wave 4 into 5 if that's what's happening from this little last structure right here. But this could be done. This could be a larger wave 2, and your wave 4 is just really tiny in here, and you're all done with this trade. But the risk is that we have one more high. So keep that in mind. Let's look at the moving averages. Again, bullish posture. So, to me, even though I'm shorting because of the resistance, you could stay long here. I think that's you're playing with fire, but I can't argue being bullish at this point until we start to get underneath this 8 and start attacking that 20. Here's our Demark on the daily. That's what we were talking about last week. We ended up getting that 13 was the exhaust 9913 count that we were looking for, that setup. Here's the 9, here's the other 9, and here's the 13. We're still getting this 9 here, and we can still continue just to hold on to this 13 and that be done. And if we break down from the last 4 trades here, for some reason, we get a catalyst, another catalyst, or just the sell-off to happen, and this 9 is negated, we still have that 9913. And so we're getting, just another pattern here, 9913 9, just in this territory. So that's a real big clue that we're going to get this reversal. And again, that reversal might just be a little one. and to bring us up to this next high here. But still, that's considered a sell-off, and that would play out nicely, even if it's just a small sell-off. So here's the OptionsTender look here. Let me pull back so we can see it. Here's your negative divergence, and on the daily time frame, we're starting to get clues that this is converging, the MACD convergence divergence, right? Moving average. We're starting to diverge. We're starting to cross back over, and when that crosses over, this negative divergence is going to start playing out. And so we made this new high here. We don't have any negative divergence at that point. We just kind of burned through it on Thursday. So nothing to see here. Let's move this back over. We'll use it later. And here you see the slow stoke that is starting to curl over. So we want to see that sell signal at the 80 here once that crosses over. So we might get that really soon. Let's look at this. Again, hit that notification bell. This starts to cross over. We might see that as soon as tomorrow with the closing information. And that will be a sell signal in itself. These are all individual setups. I'm just putting them all together. You can use one of them if you want to. I'm sharing all of these setups together for you guys just to learn each and every one of these indicators here. And now we can look at the McClellan Summation Index, and we'll add on. We'll go back to the other the McClellan Oscillator as well. We'll put that on. So we got past the negative divergence here, so we can take that off for now. And this channel, I was anticipating this channel to hold, and we just keep moving here. So, I'm going to take this off. And then if we start to see this lower, we get one more high, first of all, then this can go to the extreme bullish territory, and that could be our contrarian sell signal right now. So we don't have a sell signal on this at this point because we had this little correction here and it moved higher. So that's that's positive. All right. So we're in a positive condition. Let's see if breadth can hold this a little bit higher. Maybe just get that correction, close the gap, and go a little bit higher. That's possible. So we'll look at this again next, probably Saturday or Sunday, to see what happens. This didn't roll over. I thought this was going to go into this bearish territory. So this doesn't help out the bear scenario. It actually helps out the bull. So there's a check mark there. So let's check it out with the, let's go to the McClellan Oscillator. And, the summation is are the additions of this, the dailies all put together to give you an overall picture. And what this is telling me for the near term is that this is going to start playing out, and this is going to start rolling over, and you're going to start to see that summation roll over too with this negative information. We got well into this overbought scenario with negative divergence, and we're starting to sell back underneath the bullish territory. And I think this is going to roll over. I think we may have our high in, but here's what it will look like. If you make a new high, maybe we close the gap and come up here, make a new high, you're probably going to see in the near term a negative divergence where breadth is getting weaker. And what we're going to have to do, a good way to look at this is I usually have, my individual names. So what we're going to have to do is look at the individual names. Is Microsoft or Nvidia or any of those big names going to hold the market up? Or is Tesla going to get a bounce with some of those stronger names? And that brings price back up, while the individual names, the smaller mid caps and small caps, while they get weaker and weaker and they sell off. That, those are the things you have to look at when breadth is weak and you make a new high. That indicates to us that we're going to get a sell-off coming up soon, and it's just the market prolonging, getting to the targets it needed to. And this is a great near-term situation where you had distribution. You had that nice new high here, just like a nice new high. Market breadth is really, really strong. And then you start seeing the breadth deteriorate. All right. But you see that deteriorate, but you're making new highs, and that made new highs here. and then boom, boom, boom. Then things just start to crumble when the big tech stocks can't hold the market up by itself anymore. All right, doesn't have help with the rest of the market. So that's what we're looking at. In the near term, that might be the case as well. If we do make a new high, you're going to see a negative divergence here. All right, so that's it on the daily. So let's go over to SPY and check out the scenarios. And so I think we have a check mark here for the top being in. Okay, so we narrowed down our situation. So this is all on one chart now. I used to have two different for negative, for a bear situation, and one for the bull, but now they're both the same. And so you had this expanding ending diagonal that we're looking at, and this played out very well. And so this is a three-wave move up for a 1, three-wave to 2, three-wave up to 3, ABC, three-wave down to 4, and this easily can be counted as a three-wave up for 5 and being done. Okay? So that all in all, this made all the divergences it needed to. This can be done at the top. This could be wave 5. Now, for the bullish scenario, you have this B wave that can hold up at any zone. It can hold up shallow and have a sideways correction. It can have a deep retracement if it wanted to. I would imagine it's a little bit more shallow, being bullish, and this being holding the moving averages. If I put those on, and holds up much more shallow. Okay, so the 200 and the 50, or even if it breaks down quickly and snaps back to get back above it. So if you break down below it, these moving averages, and you snap back above them, that's going to be really bullish. Okay, so let's see if we can hold this B wave or so, and then after that, then you have targets up above where price should go to if it makes a new high. It could go all the way up to about 700 or so, and we'll add on, if we have more information, we'll add on some more targets there, and we'll get ourselves on the right side of the chart. We're going to short at this point because we have all those signals that tell us to do so. And then we'll see where support comes, and we'll try to, is it a 5-wave move down? We get a lower high and then we continue lower, or is it a 3-wave move and then we have to look out to see how strong the market is. But this will be the key level at any point. Is this 611, this 200%? That's what we've been talking about. This former high will be a really, really key level. If things start to break down, you get back above here, and it's probably not going to be a small move just to eke out a new high. It's probably going to start hitting targets at that point, and maybe even grinding higher. So, and it should be a 5-3-5. Okay, so is this an ABC into a new high and done, or is this a 5-wave move up here, and it's part of an A zigzag, where you have a 5th wave up here as well, and it could be an ending diagonal. So be aware of anything. Okay, all right. And so that's our big time. That's really the most important thing to look at. We're gonna get a reversal soon. Is this just a smaller area? See how the structure looks here. Let's go to the 65. Let's go ahead and do that, and then maybe we'll glance back at the VIX. But here's the 65, and again, let's take that out there. So we're starting to close the gap. That's good and healthy. I think that should happen. We have a new gap open here. We do have this expanding formation. So if we do make a new high, maybe we get that the top of this megaphone that's forming and holds this gap close here, and we see a new high there. That I don't know if that's the situation, but if it does happen, that's what, again, maybe we'll add on some really short-term call protection at this point when this gap closes to see if we get some sort of low bounce to protect our positions. All right, and everything on this lower time frame is also, I'll go through the indicators here. So in this near term, your moving averages, we're just now losing the 8. So we're going to start testing that 20 that goes along with that gap fill. So again, you could start seeing, if this is the top already, then you should start seeing maybe a bounce off here, and you should start seeing maybe a nesting. So 1, 2, 1, 2. Otherwise, if things start to accelerate, it's possible, but it doesn't look like it wants to do that at this point. You could get a nice long straight wave 1 or a zigzag. You're looking for a 5, 3, 5 into those buy zones that I was talking about, if the market's going to hold on to that B wave. So let me get this out of here. There could be a very near term wave 4 in here. So I'm not going to leave this out. If this is a wave 1 into 2, and this is all either wave 3, all right, or the wave 3 is already done at this lesser degree, and you have the 5. If the top is in, boom, you're not going to see this hold up. All right, but if this is actually a wave 3 here, then you still have wave 4 to go in this territory right here, which is the former all-time highs. But we're playing it for now into this zone. And then if and when that bigger sell-off occurs, this is the bullish scenario that we'll have to pay attention to. And I'm going to have to update this. We have I have to do this now so we can give you the numbers. So now this is the entire, is this what I want? So we're looking for this wave 2 right here. Sorry, I'm doing this now. Get all this out of here. Clean this up. Okay, so this is the zone with a bigger sell-off that we're looking for. If this is a pullback for B wave, we're going to look into this zone here. Could go a little bit further to that 50%, but I think we'll hold up just a little bit more shallow. Like I showed you, the 50-day moving average and the 200. So look for some sort of, it could be a triangle, it could be whatever. It can be anything in a B wave. So you can see an ABC coming here for a B wave. A, B, into some sort of shallow pullback. Even though that's a big move, you can make plenty of money on this move here. Into some of the cycle lows that we share with the members. And then looking for a continuation higher at that point. So this would be the bullish scenario where this zone goes into these former retracements. We'll call it 600 to about 580. Big zone there, 200 points on the SPX and 20 points on SPY. But the 382 would be a nice pullback for a B wave on a bullish move here. All right, I hope that helps. And the bearish scenario just says this is done, and maybe this is a 1-2. You get a 1-2 setup and lower, so they'll look the same. There's a possibility those two situations look the same, but you start to make lower lows at that point. So the VIX is important to, I share the cycles here with you. And this, you have this trend line down here with that low, and now we're holding on to this trend line into some cycle lows here. So we're in that territory. Let's see if I can't. 710 is that that low here. So maybe we end up making a higher low off of this cycle low right here, the minor that happened. We're starting to make new highs here, a little bit positive structure. And then if the market goes much higher, maybe we make that new low into the dominant cycle low. It's possible. And these are the cycles that we go through on the individual names and the overall market. So the VIX could have had its low in already, and it's really struggling to get higher, forming market structure because we're in a dominant low cycle. And then when that hits around 710 this week, that should allow the price action to start to rise after that and have a higher low at that point. That would be very positive for the VIX. Okay, that's it, you guys. That's all we're going to share today. It's a long enough video. Thank you for supporting. Don't forget to like and subscribe, and we'll see you in the next video.